Hi, everyone. Thank you so much for joining us today. My name is Sokha Yous. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. So today we're going to talk about getting yourselves out of debt. So if you're joining us today online or in person, if you have any questions at any time, please feel free to interrupt us. Just type in your question online, or if you're a little shy, you can always just send me an email. This is my contact information here. So if you cannot write this down right now, you can always go to mayocreditunion.org to our website and send an email to my email address will be on there. So just send us drop us a quick email. I'll be able to help you out in case you can't reach out to me at this time. So on today's agenda, we're going to talk about getting yourselves out of debt. So what does that look like? So we're going to talk about the importance of credit scores and how credit scores work. What's your current credit score? How to obtain your credit score? Tips to build a strong credit profile. Fundamentals of borrowing. Credit facts and myths, and then of course different avenues and how to get out of debt, whether it'll be the avalanche method, the envelope method, or the snowball method. We'll talk a little bit more about that. So the importance of credit scores, the role that they play in our financial lives. So why is it important? Because it gives you the ability to obtain a loan, whether it's a mortgage loan, a car loan, a personal loan, or it's like credit cards. So the better your credit score is, the better it is, the better interest rate that you're going to get. And a lot of places that rent, they're going to check your credit score as well, not only because they're going to check to see how you were as a tenant, with other tenant history, but they're going to see how you are with all your other finances as well. So it's really important that if you want, the best rate for everything, including rent, then you want to keep your credit score up. So when it comes to rent, though, even if your credit score is not good, maybe you might need a cosigner, or perhaps you need to do a larger down payment on rent too. And car insurance rates. So believe it or not, your car insurance premiums, they run your credit score. So the better your credit score, the lower your premiums. So aside from checking your driving history as being the #1 reason for them determining your premium, the second one is your credit score. So the better your credit score, the lower your premiums. So for example, if you just got this car insurance a couple years ago, and at that time your credit score wasn't that good, it hasn't really been established yet, or whatever the reason, and now that your credit score is a lot better, you can always call up your agents and ask them to see if they can reassess, ask them to see if they can rerun your premium, just in case you qualify for other things now that you're a little bit older or have more established credit history. And also if your employment can take a look at your credit score as well. So depending where you work at, they want to take a look at your credit score and determine whether or not you'd be a good candidate, a good fit with the company. So it's really important to have a good credit score. So if you don't have a good credit score now, we can talk about how to improve your credit score as well. So they are a statistical tool used to predict your future behavior. So the three major credit reporting agencies, each one has their own scoring method as well. The three major ones is Equifax, Experian, and TransUnion. These are the three major ones that we talk about. So when you go to different institutions, they're probably going to one might run an Experian credit report, another one might run a TransUnion, and another one might run an Equifax one. So when you're checking over your credit score and also your credit report, it's really important that you check all three just to make sure that everything is correct in all three of them, okay? So this can be found, you can find your free credit report on credit union, it's on annualcreditreport.com, so I can have that information at the end of the presentation. So if you're having a hard time pulling up your information, just let me know too. We can get together and we can review your credit score, or your credit report, and see if there's any discrepancies. We can always dispute that together too. So what goes into your credit score? So 35% is your payment history, of course, just like your car driving history, rental history, things like that. It determines the most for your how many points you get. So 35% of your credit score is your payment history. We want to keep that as as accurate as possible. 30% is amounts owed, 10% is the new credit, 15% of your credit score is your length of credit history, and 10% is credit mix. So I'll just go to the next screen, but we'll still continue to talk about more of the credit score. I see you guys writing it down now, but we'll go on to the next one here. So the payment history, we want you to pay your bills on time, and if you miss any payments, we want you to get current as as quickly as possible. And if you can't pay your bills on time, it's really important to contact your creditors. So don't wait until it's too late to contact them early. My background before I became a financial wellness counselor, I was in collections for about 16 years, and it's really, really important that we always appreciate that if people cannot make their payments on time, give your creditor a call. Let them know your current financial situation instead of just ignoring the problem. Just say, you know what, I was off work, I was sick, or whatever the reason. I don't have enough money to pay for this month bill. Can we go ahead and try to split it up for this month, half this month and half on my next payday, and see if that's going to affect your credit score. See if there's some way somehow they can defer your payment to the next billing cycle or to the end of the payment history. So it's really important that you reach out to them beforehand, let them know what's going on. So that's your payment history. Remember, that makes up 35% of your credit score. Your new credit, you want to limit as a new increase, because every time someone pulls up your credit report, that's considered a hard increase. So especially if you're applying for new credit, that's considered a hard inquiry. So you want to apply for an open new credit accounts as only as needed. So I know some, sales and stuff are very tempting. So just wait until you absolutely need it. So that way you can limit the new credit. So when you have credit cards, but you want to manage them responsibly. So you don't want to have too many credit cards where you kind of get over your head. And then also when you close in an old account, it doesn't make it go away. So just make sure that you make all your payments on your old credit cards, and just make sure that everything is closed per what the creditor is requesting. And it's not just get new credit for the sake of getting credit. So again, that makes up for 10% of your credit history. Now, your credit utilization, you want to pay down your high balance credit cards as quickly as possible. It's ideal that you stay under 30% of credit utilization. It means that out of $10,000, available credit on your card, we want you to perhaps stay under, $3,000. It shows that you have the willpower to not spend all the money, and it shows that you have the ability to pay it back, so you're not maxing out all your credit cards. So you want to pay off debt rather than moving it around. So if you have the ability to pay one credit card off completely, that's wonderful. Just pay that off and then move that money that you're paying on that one credit card over to the next credit. So instead of just moving around, opening up new accounts and moving it from one account to another. Okay, so you want you to use caution when closing out older credit cards as well. The reason why is because it goes back to the length of credit. So the length of credit makes up about 15% of your credit score. So if you're closing out your old credit card, your oldest one, even though they're in good standing, now you're shortening the lifetime of your credit history. So you want the length of your credit history to be as long as possible, because it shows that you have, a lot of experience dealing with revolving debts and credit cards and stuff. So again, talking about length of credit history, the age of your oldest account and the average age of all your accounts together. Okay, so do not apply for unnecessary credit accounts, because the more new accounts you have, the shorter your credit history for your average accounts. Use caution when opening new credit cards to transfer balances too. So is it worth it to transfer this balance into a new credit card? Because remember, when you're opening a new credit card, it's going to shorten the lifetime of your credit history too. So that's about 15% of your credit score. So we're going to talk about the fundamentals of borrowing. So what impacts your credit score the most? Or what impacts your credit the most? Of course, your credit score impacts your credit the most. We want to keep that as high as possible. Again, it's really easy to you miss a payment, and all of a sudden your score drops down, 20 points, 100 points, whatever the situation is for you personally. So it's really important that you keep your payment history, that you make your payments on time. Of course, your credit cards impacts your credit a lot too. A lot of times with credit cards, they tend to have higher interest rate. So it's really important when you do open a credit card that you pay it back on time, that you have the ability to pay off the entire balance. And if you can't do that, then make sure that you pay it off in a timely manner, and just keep all utilization under 30%. Another thing that really impacts your credit is loans, different loans that you may have. You can be your auto loan, your home loan, or personal loans. And of course, if your credit is really good, then of course those interest rates are going to be a little bit lower too, because they trust you more to pay it back on time and to pay off the entire loan. So it's really important that when you do have these auto loans or home loans or personal loans, that you have a plan to pay them back each and every month on time, and how you'll get back on track if you do fall off track. And of course, debt management impacts your credit too. So the more debt you have, compared to available credit history, available credit, then it really impacts your debt to income ratio. So it's really important that when you do have debt that you try to pay it off as quickly as possible. Now, these kind of debts I'm talking about, like the higher interest rate, like the car payments, or if that's a little bit higher than your mortgage, or if you have credit cards that are a little bit higher, it's really important that you prioritize paying off those high interest debt first. Credit increase, again, every time someone inquire about your credit, about applying new credit, that's a hard credit pull. And every time there's a hard credit pull, then it lowers your credit score by a few points. So just be very careful on when and how you want that to take place. Again, payment history, I can't stress this enough, how important payment history is to try to get yourself back on track when it comes to your credit score. And again, be careful with your debt to income ratio. You may have when you're thinking about buying a house and they said that, even though your rent is right now $1,400, you can afford that. But when you go to apply for a mortgage, for some reason you don't qualify for that $1,400 mortgage because they're looking at your total debt to income ratio. Maybe you just bought a new car, that's $35,000 loan on your credit history, on your credit report, in addition to your student loans and stuff. So they're looking at your total debt to income ratio when you're applying for like a mortgage for something like that. So it's really important that you keep your debt to income ratio as low as possible. So we'll talk a little bit about good debt versus bad debt. Mortgage can be good debt because you're getting equity on it, right? So the market is good. It's increasing equity. Education, you're investing in yourself, and just be very careful with the student loans that you're getting. Is it going to give you a good payout? Is it going to give you a good rate of return? At the end of it all, is it going to put you into a position where you're able to pay off your student loan back each month? When it comes to business debt, it could be both. It could be a successful business and becomes, good debt, but it's always good to try to pay that off as quickly as possible too. What you don't want to do is, try to get a loan to put towards some sort of investments, such as the stock market in particular. So you don't want to get a loan for something for that. So it's really important that if it is, investment as a good or bad debt, it can be investment towards property. It could be, good debt that way too. So vehicle loan, is that a good or bad debt? If it's something you absolutely need, you absolutely need the transportation. You don't have any other way to get to work or school or daycare. It could be, it could be a debt that's considered good because it's getting you to your next step in life, right? But ultimately, we want you to pay off your vehicle loan as quickly as possible because of the potential higher interest rate that people typically have on there. Credit card debts is always, typically bad debt because of the higher interest rate if that's what you're facing. Store credit typically have a lot higher interest rates, so between 29 to 35%. So if you have some store credit, there's going to be some specials out there like Lowe's or Home Depot where you can qualify for the first 6 months at 0% interest. So go ahead and pay that off as quickly as possible, because if you don't, then it's probably going to go up to like 30 or 35%. So it's really good to try to get rid of your store credit as quickly as possible. Cash advance is always bad debt. So the interest rate is ridiculous on there, so it's never a good time to have cash advance. So how do you start paying off debt, right? We want you to organize your debt. You want to take a look and see where your debt is where it's at. You can go to annualcreditreport.com. Again, I'll have that link towards the end, or I can email it to you. If you're not able to write it down, you want to go and pull up your credit report and just make a list of all your debt. Do you have your medical debt that's not shown up on your credit report? Just remember that. That's a new thing that just got approved maybe like 3 or 4 months ago, that your medical debt will no longer be on your credit report. So it's important that if you do have medical debt, that you reach out to the facility, whether it's a private company or a large hospital, reach out to them and see how much debt you have with them. Just have them send you your payment history and how much debt you have with them, so that we can determine what's been paid, what's been ran through insurance, and what is your actual amount that you owe. So you want to organize all your debt, right? You can organize your put it as mortgage, your car loan, personal loans, student loans, your credit cards, your cash advance, money that you owe, Aunt June from 2 years ago. You can add that on there too. The next thing you want to do is you want to prioritize it. So which one to pay first? Which one is more important to you? Has Aunt June been asking for, pay her $500 back for the last 2 years, and if you don't, is that going to hinder your relationship with her? Then we might want to prioritize that first. So if you don't have any in June that you're owing money to, let's go ahead and prioritize one that has the highest interest rate first. So you can do that. So when you're paying a debt off that starts with the highest interest rate, that's called an avalanche debt repayment. So you want to organize it from the highest interest rate to the lowest interest rate, no matter what the balance is. That will help you pay it off a lot faster too, because you're paying less in interest. And while you're paying off your debt, we highly encourage you to not accrue new debt. So there are some certain circumstances where it might do you some good if you get a personal loan or a debt management loan to consolidate all your debt together and have that loan pay off everything, all your debt. And that way you only have one loan to pay back at the end of each month. So, but if that's not the situation you're in, then we want you to not accrue new debt, right? Next thing to do is always budget. So we want you to do a budget and how much some of the expenses you have coming in and how much some expenses you have going out and your income each month too. And see how much is left over for debt. And we want you to prioritize debt as in putting an extra line on your budget sheet saying that, we're going to pay this much extra towards this debt for this month until it's paid off. Things to consider when using a loan to pay off debt. Again, the personal loans or debt management loan. Consider the interest rate. Is the interest rate going to be higher than the credit cards or the loans that you're paying? If it is a lot higher, then it's probably not worth it, because we want you to pay the debt off as quickly as possible. And if the interest rate is higher, it might take you a little bit longer to pay it off too. And the length of time you'll save, are you only going to save a couple months by getting, by getting a loan to pay off your credit card debt? Or is it better for you to just go ahead and just organize it one by one? Do you have a home or a vehicle that you can refinance? Do you have enough in equity to put towards your debt, and how to pay? Is it going to be at a lower interest rate too? And lastly, we want you to really look into credit card balance transfer. If you qualify for a 0% interest rate on a new credit card that has a large available balance, available credit, that allows you, 0% for the next 12 or 24 months, that might be something to really consider also. Again, that's you opening up a new credit, so it shortens the lifetime of your credit length or your credit history. But also you're going to save a lot of money and interest in the long run if you're able to transfer or roll over those balances to that new credit card too, and just really buckle down the next year or two to pay off that credit card on that new credit card if you do that balance transfer. It's really, really important to reassess or to assess your budget and your finances, where they're at now and where they might be in a year or two, just to see which one might be easier to for you to take advantage of to pay off your debt. So myth or facts, if you can afford your payment, call your lender and creditor, and doing so will protect you, protect your rating. That could be a myth, because you can call them ahead of time and let them know what your situation is. And if they're not able to move it to the lifetime of your, if they're not able to work with you and let you know that they can't move your payments for you, they can still affect your credit history. You can still be reported as delinquent. But there are some chances that some creditors, or a lot of creditors, will be able to work with you, let you know that you make a small payment by your due date this month, then they won't report it as delinquent, and that you still have an extra 2 or 3 weeks or something to pay off the rest of it. And opening a credit store credit card will save you money on what you're buying and build your credit. It's both. So if you have a sale, for example, if your dishwasher or laundry or your dryer is broken, and you go to Lowe's or Home Depot right now, they're offering a 0% down or 0% for 6 months, and that might be really helpful for you to go ahead and get that item. Get your 0% for the next 6 months, but as long as you pay it all back, because if you don't pay it all back, and within that 6-month period, then the interest rate jumps up to 30 or 35%. So now you have this balance that's on your credit card, and now it's affecting your credit. And if you're not able to pay it back on time, if you're not able to pay it off on time, then it's going to show up as negative on your credit report too. So it can be both. And if I close a credit card, even if it's a card I don't use anymore, my credit score will drop sometimes. So if it's an old credit card, again, if it's one of your oldest one and you want to close it, so remember, it's once you close out that old credit card, even if you don't use it, it's going to shorten the lifetime of the length of your credit history. So we want to keep your credit history length as long as possible. Requesting my own credit report hurts my score. No, that's a myth. You can actually go to annualcreditreport.com, and that's for free. So you can get all 3 credit reports, the Equifax, Experian, and TransUnion. It'll show your credit reports, but also you can pay for your credit score, and that doesn't affect your credit score. You can always go to Credit Karma. If you have a credit card, a lot of times they have your credit scores on there too, so you can always take a look at that on your credit card statements or on the apps. Myth or fact, good way to find out my credit score is improving is to test by applying for credit cards. It's a partial fact. You can always go online, like I said, on your credit card statements or apps, and you can take a look and see if your credit score went up. But also, you don't know if that is the correct credit score or not until you apply, do an actual application for a loan. So if you're looking at Credit Karma, they'll probably just give you an idea what they have a number, a set number, but it might not be the same score that the bank or the institution is using when you apply for a mortgage or, a car loan. But it kind of gives you an idea where it's sitting at. So you won't know what the actual score is until you go and actually apply for the loan. Not having any credit history is really bad. It's a myth because it's better to not have any credit history versus having bad credit history, because then you can always rebuild new and start a new relationship with the credits. It hurts your credit score when credit cards maxed out, but all your other credit cards are not. That is a fact. So if you say have 5 credit cards and you maxed out on one of them, it still shows 100% utilization on that one credit card, so it can drop your credit score by quite a bit. And then when the other credit cards actually see that you've maxed out on that one credit card and they feel like they don't want to be the next victim, they can also lower your available credit on your current credit card, even if you haven't even touched that credit card in a while. So just be mindful of that. And if I pay off my credit card every month, I'll have good credit. Fact, unless you're using all that money to pay on that credit card, but you're falling behind on other loans too. So it is important to pay your credit card off every month if you have the ability to do so. Just remember that, after your mortgage, your car loan, your other loans, things like that, just make sure all those are current too. And if you have enough extra to pay off the entire balance each month, then pay it off each month. But if not, then don't skip those other payments just to pay off your credit card each month. It's better to settle an old debt for less than the full balance and pay the full amount. So that can be both myth or fact. So it's always good to pay on your debt, whether it's old or new, right? So if it goes on a credit report or into collections on your credit report, and you say, you know what, this is like 4 or 5 years old. I don't have the ability to pay off the entire balance anyways, but I have maybe 50% to pay it off. You can still offer that to them, but just remember that it's always good to pay it off and have it paid, show that it's paid on your credit report. But when you're an institution like a bank looking at your credit score, your credit report, and trying to determine whether or not you get approved for a loan, they can actually see that and say, you know what, this person has a habit, of getting loans, not paying it, goes to collections, and they end up just paying half of what they owe, just to get it closed out and show that it's paid. So that it might be, if that is your pattern, then you might not look as good on to other institutions as well. So if I bruised credits in the past, filing a dispute will remove that bruise and improve my credit. No, that's a myth. Just because you dispute it doesn't mean that it's going to fall off. It's just going to show that, there is a dispute on it. So credit repair companies can remove collections and late payments from the credit report. They can remove it if it is legitimately, incorrect. So if you made a payment on a credit card and for some reason they marked it as delinquent, but you have proof that you paid it on time, you can submit that proof to the credit bureaus, and they can actually just remove that. They'll contact the creditor and let them know to update it because you have proof that it was paid on time. So you can actually do what the credit repair company can do on your own, except you don't have to pay for anyone. And a lot of times, before you work with credit repair companies, you really have to vet them out because there's a lot of scams out there with this type of business. Once you have bad credit, you'll always have bad credit. That's a myth, but it's really hard to improve your bad credit. It just takes time. It's not, I guess I shouldn't say it's hard, it just takes a little bit longer too. I've had major disruption in my credit history, such as bankruptcy, foreclosure, and repossession. I should open a credit card to build my credit score. In fact, yes, you should. Unless we want you to learn why you got there in the first place, right? So how did you get in debt in the first place? How did you end up filing bankruptcy or getting repossession in the first place? So we want you to explore those things first before you open up a credit card, because we don't want you to have the same habits that took you into that situation in the first place. My credit score can change daily. That is true. So it can change with different whether it's Equifax, Experian, TransUnion, that can change daily depending on what they've updated or not updated. So it's really important that you review all three yearly, preferably. But if you can do it a lot, more often, perhaps every quarter, then that's best as well. So a lot of times when I talk to people about paying off debt, I mainly talk about, credit cards is what a lot of people have debt with. So it's so individualized when it comes to paying off debt and the process that I put people on. So it's really personalized. Like, if you're saying that you have 5, 6 credit cards and you have a personal loan you want to pay off, it's that I would put them on an individualized plan on how to get that paid off within 6 months or a year or within 2, 3 years, whatever the situation is. So when we're talking about how to get yourself out of debt, it's really important that you talk to someone, whether it's a financial wellness counselor like myself or, a financial advisor if you're working with someone, to see what is your individualized plan. But it's always best to pay off the ones with the highest credit card the highest interest rate first, and then not accrue any more debt. Is pretty much the basic when it comes down paying down debt, right? So if you need an individualized plan, or if you need to talk to me a little bit more in depth about your situation, you can always reach out to me by email, by phone, and then we can schedule a time to meet and put you on that plan. But the presentation is basically just a very basic on debt management, on the credit scores, the importance of the credit scores, and how we can try to get you back on track, just to educate you a little bit more on it. But if you're looking more for this is the plan that we have for you, then you can schedule an appointment to meet with me or with someone else that you feel comfortable with, outside of our institution, to try to set you up on a very specific individualized debt repayment plan. And also, if you think that you want to talk to a loan officer about getting a loan to pay off your credit card debt, or whatever debt you currently have, then you should reach out to us too and just talk to a loan officer and see what might be best for you. Okay, so again, this is my contact information. And if you have any questions at all, feel free to give me, just email me or reach out to me online on mayocreditunion.org is where we're going to be at. So, okay, you have any questions?
I have one question.
Yeah.
When you were talking about that medical that's not on the credit card yet, is medical debt in collections also included in that?
So the collections might show up. So if it's already in a third-party collection, the question is, for people who can't hear, if for online, is that for medical collections or medical debt, is it going to be on the credit report because of the collections? So the medical debt itself, let's say if you owe Mayo won't show up on your credit report, but if they hire like a third-party collection agency, then that third-party collection's name will be on there. So, and also, so just be careful of that. Just because you owe a medical debt, it's not showing up on there, that doesn't mean that they haven't hired a third-party collection agency to put your name on there. So, yeah. And also, once you have medical debt, is it going to be, you can always negotiate with them too if it's in a third-party collection, that third-party collection agency add extra fees on there. Were there, any HIPAA violation where, the hospital or the clinic forward any personal information that they have for you to that third-party company? Is there room for negotiation for a settlement, so you have to pay it off in full, or how much time do you have to pay it off before they send it to an attorney's office, if that is the next step? So it's important to ask those questions too. But also, just because it's with a third-party collection agency, that doesn't mean you cannot reach out to the original creditor, right? So if you owe Mayo, you can still reach out to Mayo and see if there's anything that you can do, any hardship plan that you can do with them too. So it's always good to reach out to them that way. Okay? Yeah.
I got a question on that.
Yeah.
Now, I was paying off my medical bills, and then they did get turned in because they didn't get the amount they wanted.
Oh, sure. Yeah.
But I paid what I could.
Yeah.
I would get these phone calls from the third party, and they'd say, "Now, don't you call Mail and tell them that you're going to pay it off." Why would you even say something like that?
Oh gosh, yeah. I don't know why they would say something like that. Yeah. Yeah. So, why would that third-party collection agency call you and tell you not to call Mayo?
Yeah.
I don't know why that would say that. It could be an individual that doesn't understand the laws or the rules of the collection of third-party collections.
They get a percentage of what they claim.
So sometimes a collector can get a percentage of commission, off of that, but you can still reach out to the first party. So it doesn't matter who you. Yeah. Well, I'm glad that you do reach out to Mayo, because whether it's Mayo or whether it's, American Express or Capital One, no matter who it is, if a third-party collection agency is calling you and they're saying something like that to you, say, no, don't you go back and calling them to verify they're with us or whatever the situation, then you should call the first creditor, the original creditor, to find out, who is this sent to? Is this company legitimate? Is this a scam that they're calling me? If you did send it to a third party, what is their contact information? And then I would just reach out to that third party direct from the information that they gave you, so that way you know for sure that it's not a fraud or a fraudulent company, because there's a lot of frauds and scams out there. So I'm sorry they said that to you. They're not supposed to. Yeah.
It's kind of weird.
Yeah, yeah.
Why would somebody say something?
I know, yeah. Yeah. Well, I'm glad you called Mayo. So.
I just laughed and said,
Yeah.
I'll just make $10 more on your bill, we're fine.
Yeah, but again with medical bills, remember each visit is you're going to accrue new bills. So if you're making payments on the bills that you had, and then 2 weeks later you go to a different visit, you're going to get a new bill on that visit. But so the payment arrangement that you already made with them for the visits before does not include the new visit. So you need to make new arrangements for the new visits too. Yeah. So just a little something. But if anyone out there needs help taking a look at their collections, whether it's legitimate or not, whether they need help calling a collection agency, I know that can be a little nerve-wracking, then I can help you guys with that too. So, and again, my services is free here, so you can just reach out to us. Whether you're a member or not, we prefer that you become members of ours, but if you're not, I can always help you too. So, any other questions? All right, perfect. Well, thank you so much for your time today, and have